The central bank digital currency is closer to becoming reality today than ever before. In this video, we will explore the latest trends and developments in finance and technology. In case you didn't know, the central bank digital currency, otherwise known as CBDC, is a digital form of a country's fiat currency issued by its central bank. So let's explore into the world of CBDC and understand what it means for the future of money. Please make sure to subscribe to my channel. Here, we delve into the most up-to-date developments in the United States, covering breaking news and providing essential insights on the current state of our economy. But first, what exactly is a central bank digital currency? Well, it's a digital representation of a country's official currency, such as the dollar, euro, or yen, that is issued and regulated by the central bank. CBDC is designed to function as a legal tender, just like physical cash. So why are central banks considering CBDC? Right now, there are several potential benefits. First and foremost, CBDC can enhance financial inclusion by providing a secure and accessible payment system for everyone, including those who are unbanked or underbanked. It can also reduce costs and increase efficiency in transactions, making payments faster and more convenient. Security and privacy are key concerns when it comes to digital currencies. Central banks are well aware of this and are working on implementing robust security measures to ensure the safety of CBDC transactions. Currently, they are exploring ways to balance privacy and transparency to protect user data, while also complying with regulations to prevent illicit activities. CBDC also has significant implications for the banking system. While it's not intended to replace traditional banking, it can reshape the way we interact with our banks. With CBDC, individuals and businesses can have direct access to central bank money, reducing the need for intermediaries. This could potentially disrupt the current banking model and lead to new opportunities and challenges. But it's important to know that CBDC is not just a local phenomenon. It has a global perspective. Central banks around the world are exploring CBDCs, and some have already initiated pilot projects and research studies. The introduction of CBDC could transform cross-border transactions, making them faster, cheaper, and more secure, while also fostering international trade and financial integration. But it is crucial to examine the potential drawbacks of central bank digital currency. CBDC involves the use of digital transactions that can be easily tracked and monitored by central banks. This raises great concerns about privacy infringement, as individuals' financial activities could be subject to constant surveillance. Unlike traditional cash transactions, which provide a certain level of anonymity, CBDC poses risks of government intrusion and potential abuse of personal financial data. The loss of privacy undermines individual freedom and can lead to a surveillance state. Introducing CBDC introduces a new digital infrastructure, increasing the potential for cybersecurity threats. Central banks must address and mitigate these risks to ensure the safety of digital transactions. However, given the increasing frequency and sophistication of cyber attacks, there are legitimate concerns about the vulnerability of CBDC systems. A successful cyber attack could result in financial losses, economic instability, and erosion of public trust in the monetary system. CBDC also could disrupt the traditional banking system, potentially leading to financial instability. By providing individuals direct access to central bank money, the role of commercial banks and intermediaries may be diminished. This could reduce their profitability and ability to lend, potentially causing a contraction in the credit availability. Additionally, in times of financial stress, the rapid flight of funds from commercial banks to CBDC could exacerbate liquidity shortages, further destabilizing the financial system. While CBDC aims to enhance financial inclusion, it also brings a risk of creating a digital divide. Not everyone has equal access to digital devices or reliable internet connectivity that is required for CBDC usage. This could leave certain segments of society, especially vulnerable populations, at a great disadvantage. If CBDC becomes a primary form of currency, those without access to digital infrastructure may face challenges in participating fully in the economy, exacerbating existing inequalities. Monetary policy limitations is also another drawback. CBDC implementation may impose limitations on traditional monetary policy tools. For instance, negative interest rates, which are occasionally used to stimulate economic activity, may become less effective with the existence of CBDC. Individuals may choose to withdraw their funds from commercial banks and hold CBDC to avoid the penalty of negative interest rates, hindering the central bank's ability to control the economy during times of a recession or deflation. While central bank digital currency offers potential benefits, it is essential to acknowledge and address the concerns associated with its implementation. Privacy risks, cybersecurity vulnerabilities, financial stability concerns, and unequal access are factors that require careful consideration. Striking a balance between innovation and mitigating these potential drawbacks is crucial to ensure the effective and responsible implementation of CBDC. Without a doubt, central bank digital currency has a potential to reshape the world of finance. So let's dive into why it may be beneficial for the world. With CBDC, individuals can have a digital wallet directly linked to their central bank, allowing them to make secure transactions and participate in the formal economy. CBDC has the potential to promote transparency and combat corruption. Since every transaction is recorded on a secure and immutable ledger, it becomes difficult to manipulate or conceal financial activities. This can help in reducing illicit transactions and corruption. By enabling faster and more efficient transactions, CBDC may also stimulate economic growth. Businesses can benefit from reduced transaction costs, increased liquidity, and improved access to capital. Moreover, the ability of central banks to implement targeted monetary policies through CBDC can help stabilize economies, manage inflation, and support growth. CBDC has a potential to streamline cross-border transactions, making them faster, cheaper, and more secure. With CBDC, international trade can be facilitated, removing barriers and reducing reliance on traditional intermediaries. This can foster financial integration, boost economic cooperation, and strengthen global trade relationships. But the big question is, where is CBDC inevitable? The truth is that central bank digital currency could be inevitable in the United States due to the rising pressure on the greenback to remain the dominant reserve currency. There are currently 130 countries worldwide exploring a CBDC. and the United States does not want to be left behind. The United States has benefited from being the world's reserve currency, so it has a big impact on our standard of living. And with the de-dollarization trend gaining speed, central banks worldwide hold fewer reserves in the United States dollars, preferring gold and other currencies. While the concept of a digital currency issued by central banks holds immense potential, it is essential to address challenges such as cybersecurity, privacy, and financial stability. So what are your thoughts on CBDCs? Please comment below.